Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and what a smart run-up is what we've seen in case of gold and silver prices in the overnight market after the US Fed meeting, and the narrative that has come in that the next year could see 3 times of interest rate cuts, 25 basis points each, clearly has worked its way into the gold and silver prices. But from here, what is the scenario? What is the kind of buying that we are seeing in the markets? For those cues, we are now joined by Mr. Colin Shah. Colin, hi, thank you so much for joining us. And it's been a very strong, smart day that we've seen into the commodity markets here. Gold prices have gained up by nearly 2.5%. Silver is up nearly 4.5% as well. So how would you look at the markets going forward from here, especially when it comes to the gold prices?
So, Manisha, like we've been saying since a while, gold is definitely, in the next bull run phase of it. And 1 year down the line, we see the rates being, I guess, 2,400. And we'll only see gold going up. It was expected that the Fed won't increase any more rates because, otherwise the US would have slipped maybe into a recession, and they have an election year coming up. So with the Fed reducing rates over the next 1 year, and the inverse proportion, the relationship which the dollar and gold have, gold will only continue to go up. And we still have turmoil in, the world with the wars. We have China not coming out of their economic situation. So gold continues to be a safe haven. There is a lot of buying happening from central banks globally. And we only think that it's only going to continue to go up. We may have a few turbulent days and weeks where it has some kind of correction, but over the long term, we're definitely seeing a big bull run happening.
All right. With the kind of volatile moves that we've seen in gold, Colin, so, yesterday, same time, it was perhaps trading at around 1980. It's trading at 2030 right now. So a $50–60 of a move is becoming a norm now. Even for the Indian markets, when you make those calculations, is it slightly difficult right now to do business with these sharp moves?
It is difficult. I won't deny that. It is difficult because it's practically impossible to price with stability, especially when you want to advertise and promote things at a fixed price. With this kind of volatility, it does make business challenging. But at the same time, what we've also seen historically happening is whenever there is volatility and, these kind of sharp rises or drops. So whenever it rises sharply, the consumer waits for the next drop. Whenever there is a drop, we see a sudden flood of consumers walking into stores. So it's good and bad for business, But having said that, since I guess the Fed has very clearly spelled out what the next year looks like, the direction is clear that it's one way. And that's why I think there will be, that news will spread to the consumers over the next 2 to 4 weeks. And I think there'll be renewed buying, especially in terms of investment class.
Colin would also want to understand that on ground, what is the kind of wedding jewelry demand that we are looking at right now? Because there has been a lot of euphoria being created on the number of weddings expected in the next couple of months or so. But are you looking at those kind of footfalls within the industry?
No, Manisha, we're not, unfortunately. So though, there was euphoria that there are 30 lakh weddings, the industry did expect a huge amount of spending. But due to the volatility that we've seen in gold prices especially, diamonds luckily has been stable, and we're seeing a slight up curve also in terms of pricing and stability. But due to this huge volatility in gold, the kind of spending that the industry expected hasn't really happened. Having said that, we did have, a sporadic few weeks where the retail market on the weekends was very strong. Then we've had a few weeks when, after Diwali, there was a lull. But the industry is still optimistic that the run-up to the budget, and especially with stock markets being strong, a lot of liquidity in the Indian domestic market, and especially the tier 2, tier 3 towns where maybe there is a huge amount of spending happening on big weddings for the first time. We're hopeful that we'll make up our numbers and have a 10 to 15% growth at the end of the year due to this upsurge over the next 2-3 months.
Okay. Colin, also, what's your sense on the prices itself? While everybody seems quite bullish on this, and when you look at the dollar terms, gold has outperformed silver. It's up nearly 15% for this year, while silver is up about 5 to 6% or thereabout. What is your sense as industry on where the gold prices could range in 2024?
2024, they should range between 2100 and 2400. Next Diwali, I think it will be more towards 2400, but we will see a 10 to 20% upside in gold rates next year. If things stay as they are today, if the Fed truly decreases interest rates, the turmoil that we see in the world continues, China doesn't come out of, their economic situation, then gold will see a north towards, that kind of price range between 23 and 2400.
A final question, Colin. Well, of course, we are still, and we'll still touch base before the budget actually comes in, but we've already been told that it's an interim budget and not to expect too much out of it. But is the industry really looking forward to anything that comes in favor of it?
What the industry really needs is, this renewed SEZ bill. And if that happens, because that really won't impact our, fiscal situation in any way, but it's more towards the ease of doing business. And that's something that the industry is really looking forward to.
We'll keep an eye out on that. Colin, thank you as always for joining in and talking all things about gold, jewelry, bridal buying, and of course, the budget which is upcoming. And there are a lot of expectations clearly building up from all sectors there.